In today's video, we're going to be talking about the different stocks that I am personally really looking at this month of March 2021 to purchase and hold for myself. Of course, we're dividend investors on this channel. You may be, or you may be just looking for some great dividend stocks. These are going to be great for the future as well. So let's get down, let's check these out. So my first pick for this month is National Bank, and there are a couple of reasons behind this. They had a blowout quarter, they had great earnings, and of course they keep on backing that up. They continue to have great quarters. They do pay a 3.5% dividend at the time of making this video. And, of course, we want to look at the PE ratio when it comes to the Canadian banks. That's actually very important, and I'm going to be breaking that down in a future video as well. But you really want to find the Canadian banks that have some of the lower PE ratios, and I'm talking about the top 6 banks, because usually the lowest PE ratio will grow the largest over the next few months. From there, what we want to look at is the 52-week range. Is it close to the 52-week range? And yes, it is, but there was a slight pullback recently. But they did have a blowout quarter, which means that they should be great and should continue to rise over the next 3 months. From there, we want to look at the volume, and of course, at 1.5 million shares per day on average is really good. And this is what I'm talking about. This was between now, which is right here, that's now, and of course the COVID pandemic. It has had a doubling since then, almost a doubling. And that is absolutely fantastic. And since we're looking at a chart that is almost 10 years, or basically 10 years, you can see that it's had a massive growth over this time. We're looking at a stock that way back here, 10 years ago, was sitting at roughly $15 per share. And since then, it has grown to $80 per share. This is not just a dividend-paying stock. This, over the past 10 years, has been a growth stock. If you can double your money multiple times over 10 years, you are in a growth stock. And that's what National Bank has, and that's why their dividend is a bit lower than most other Canadian banks. Now, over the next 10 years, will they be a continued growth story? Potentially, but you can never look at the past to tell the future. But what I would be looking at is over the next 10 years, if they're not growing like this, they'll be probably growing their dividend. And Canadian banks in general, the top 6, Laurentian Bank is not one of the top 6 banks, but National Bank is. But from there, all of the top 6 Canadian banks have been growing and stabilizing their dividend over the past 100+ years. On average, they have not lowered or stopped their dividend for over 120 years. Some banks like BMO can stretch up to 190 years. That's how long they've been paying and not cutting, or also not cutting it at all. This is amazing. Canadian banks are probably the best investment that anybody can make. That's my own personal opinion, however. And then we want to look at earnings, and of course all of the last 4 earnings, and I just recently made a video about their last 4 earnings before their recent one, and of course that was a beat as well. So when you're looking at over a year of beats, that is fantastic. And of course 2020 was an interesting year for most of everybody, and they were still able to squeak out a massive earnings as well as great revenue. So that is fantastic. BMO is the most interesting because they beat analysts, or they beat last year's U.S. earnings by over 60%, which is fantastic. This is what I'm looking for when I'm looking for a growth story. Can a Canadian bank go into a new market and grow their earnings? Well, BMO is, TD isn't. So because of that, I personally have BMO at the top of my list with National Bank to invest in right now because of the growth potential. We have BMO, who is currently at 4% dividend, which is pretty good. We also have a volume of 2.5 million shares per day, which is great. And then we want to look at the PE ratio, which is again around 12.65, which is roughly around the same as National Bank's numbers. And of course, when we start looking at their recent history when it comes to their chart, of course, they were playing within a range for a very long time. Anytime Canadian banks do this, which most of them did other than National, you know that there's going to be a recession coming. We can see that way back in 2008 when we seen for a smaller period of time a Canadian bank, or most Canadian banks, were kind of stabilized and unable to beat past a certain level. And of course, there was that massive downturn in 2008. And we had the same thing in 2020. From 2018 to 2020, there was no real growth. Now, this of course happened here, but that is something that will happen after a recession. So once this grows just a bit more, in my opinion, just a bit, there's going to be a leveling off period. And of course, at that point in time, you would be looking at getting into covered call strategies with the banks. Now, they did have a miss in the oldest quarter that we have history on Yahoo. However, this was because they were putting a lot of provisions aside for loan losses because COVID was coming. So that is not something that I would be personally looking at, even though there were a few banks in Canada that did beat earnings still. From there, we did have a great earnings, like I was mentioning, with the US earnings as well as some of the Canadian earnings. And 2020 was an interesting year for everybody, as we can see here. And I'm going to say right now that they will probably recover back to their 2019 revenue and earnings for 2021 because of earnings like this if they were to continue. Another great dividend-paying stock is an American stock. Now, they currently only pay a 0.5% dividend, but Tim Cook, according to an interview that I recently seen, did say that they are looking into doing more share buybacks, but also raising their dividend, which is something that we as dividend investors would like to see. If that could get over 1%, I think we would all be extremely happy. Of course, it's Apple, so their volume is ridiculous. Now, something with Apple that a lot of people don't really look at, and they always say, oh, Apple's too high, it's going to crash. Apple's too high, it's going to crash. Well, guess what? Let me show you something. Of course, yes, it is high. It's had a little bit of a pullback, just like every other tech stock. But when we start moving this chart back, check this out. This is actually quite interesting. They have that same growth pattern no matter how far back you look until you start getting to let's go a little bit further. Until you get to 1999, 2000, they had that spike. But basically from 2004 on, they have had that growth line. If we go back, we can see it all the way from 2000, all the way till now. That is amazing. And this is why I say that, of course, you cannot tell the history of what happens, but the future will always be blind to us. You can always see what happens in the past. The past doesn't dictate the future, but when you've got over 20 years of the same thing happening, it's generally going to continue for at least a short bit longer. Now, their earnings and revenue have been great. We can see that they've beaten all the quarters. The recent one has been really good. And of course, everyone had a tough year in 2020, but Apple didn't. They did amazing. And of course, my final stock is Bank of Nova Scotia. The only reason for this is because their CEO came out on BNN, which is our CNBC up here in Canada. And from there, what happened was he came out and said they want to do share buybacks once the government allows them to do so. And of course, they want to start raising their dividend, which is fantastic, especially when they're already paying close to 5%. They're at 4.8%. Their PE ratio is a bit high, and of course, I will be mentioning that in a future video. But it is quite interesting. They are having an average volume of shares being traded at a 4.2 million, which is ridiculously high. And that's why I like Bank of Nova Scotia, is because their dividend and what their CEO said. Their CEO said that they are a cheap stock. Considering that they are one of the highest PE ratios, I disagree with him saying that they are a cheap stock. However, maybe by him saying that they're a cheap stock is maybe because he sees that there's higher earnings coming in the future, which will then push down the PE ratio. Now, of course, they have not gone back to their all-time high, which is interesting considering that they did have a pretty good quarter. But this shows me that, yes, they had a fantastic quarter. They haven't gone back to their all-time high, which tells me that they have some room to run, which makes sense considering that their CEO said that they are a cheap stock. When they start buying back shares, if they're allowed to ever again, which they should be, because, of course, COVID's not going to last forever, right? But anyways, so once they start buying back shares, I'm going to assume that the price will go continuously higher. And of course, as we can see here, they've had some great earnings. They've blown out 2 quarters in a row. They've been tight on 2 quarters. They've had a loss on this quarter, but I shouldn't say loss, it's more of a miss, but that was more or less because of loans and things with COVID-19. These are my picks for the month. I hope that you have enjoyed, and of course, I hope that you basically kind of got some information on each one of these stocks that you may not have known before. And of course, never trust a random guy like myself on the internet. It's usually a recipe for disaster. Always do your own research. But again, I hope that this has helped. I'll see you guys again next time.